In this video, we will review the 3 flexible spending accounts, or FSAs, that the University of Rochester offers to eligible employees. What is a healthcare flexible spending account? A healthcare FSA is a tax-advantaged savings account that allows you to set aside money for eligible expenses on a pre-tax basis. You would pay out of pocket at the point of service and get reimbursed for the cost of your qualified medical, prescription, vision, and dental expenses. Benefits of a healthcare FSA. Starting on the effective date of your FSA, you have access to your full annual election. For example, if you elect to contribute $500 to your FSA for 2018 during the open enrollment period, on January 1st, 2018, you will have access to your full $500 election. If you buy prescription glasses for $200 on January 3rd, you would pay out of pocket at the store and could submit a reimbursement request that same day. You can receive your full $200 reimbursement for the cost of the glasses in January, even though you have not yet contributed funds to your FSA. Your FSA contributions are taken as pre-tax deductions each pay period. The reimbursements you receive for qualified medical expenses are also tax-free, so you save on taxes through your contributions as well as your distributions. The eligibility requirements. To elect an FSA, you must be actively employed in a benefit-eligible position at the university. Unlike a health savings account, you do not need to have medical coverage through the university. If you elect an FSA through the university and elect medical coverage elsewhere, your FSA will be administered by Lifetime Benefit Solutions. Your annual FSA election in 2018 cannot exceed the IRS maximum of $2,600 per year. If you are married and filed taxes jointly, you and your spouse can each have an FSA, but the combined total cannot exceed $2,600. Because FSAs are governed by the IRS, you can reimburse yourself for qualified medical expenses incurred by your spouse and your qualified tax dependents until the end of the year in which they turn age 26, even if they are not covered under your health care plan. How does a healthcare FSA work? You can elect an FSA either during the annual open enrollment period, within 30 days of your hire date or the date that you became newly benefit eligible, or within 30 days of a corresponding qualifying event. When you elect an FSA, you choose the total amount you want to contribute for the calendar year. However, your election must be between the $100 minimum and the IRS maximum of $2,600. Your annual election will be prorated based on the number of pay periods remaining in the calendar year and will be deducted pre-tax from your paycheck each pay period. Once your FSA is effective, either January 1st if you elected an FSA as part of the open enrollment period, or the first day of the month that your health plan election begins, or the first day of the pay period after your election is processed. You can reimburse yourself for qualified expenses incurred while your FSA is open. The IRS allows employers to offer account holders the option to carry over up to $500 year to year. How can I use my healthcare FSA funds? Medical, pharmacy, and dental claims that are processed through your university health or dental plans will be automatically reimbursed, unless you opt out of the automatic reimbursement feature. In that case, you would choose which claims you'd like to manually submit for reimbursement. Please note, depending on your third-party administrator, Aetna or Excelis, there may be restrictions for the automatic reimbursement feature. Contact your FSA administrator, Lifetime Benefit Solutions for Excelis members, or PayFlex for Aetna members, for additional information. You can set up direct deposit so your reimbursements are deposited directly into your personal banking account. Otherwise, you'll receive a check for your qualified medical expenses. If you or your eligible dependents have qualified medical expenses that are not covered under the university health or dental plans, you can complete the online reimbursement request, or you can fill out the reimbursement forms, available on the benefits website or in the benefits office, and fax or mail your requests to your FSA administrator. Qualified expenses must be incurred after the effective date of the FSA by yourself, your spouse, your domestic partner, if he or she is also your tax dependent, or your qualified tax dependent children up to age 26. Flexible spending accounts are governed by the IRS. The list below includes some of the qualified medical expenses designated by the IRS. View IRS Publication 502 for a complete list of qualified medical expenses eligible for reimbursement through a flexible spending account. Limited purpose flexible spending accounts. You can only contribute to a limited purpose FSA if you are also contributing to a health savings account and are covered under the Your HSA eligible plan. A limited purpose FSA can be used to pay for qualified vision or dental expenses until you meet your deductible on the Your HSA eligible plan. After you meet your deductible, you can use your limited purpose FSA to reimburse yourself for any qualified medical expenses incurred after your deductible was met. You have immediate access to your full annual election as of the effective date of your account. You don't have to wait until you've contributed the funds through pre-tax payroll deductions. The IRS annual FSA maximum election for 2018 is $2,600 per calendar year, just like the Health Care FSA. Due to the restraints placed on the limited purpose FSAs by the IRS, the limited purpose FSA may not be beneficial to all employees. You might want to consider electing a limited purpose FSA if you have planned dental or vision expenses early in the year. For example, many account holders use their limited purpose FSA to reimburse themselves for orthodontic expenses incurred while the account is open. Please note, limited purpose FSA claims must be manually submitted. Check with your FSA vendor for instructions. The Dependent Care FSA. The Dependent Care FSA is available regardless of your health care plan choice. It is an option to allow you to pay for a portion of your eligible daycare expenses with pre-tax dollars. Generally, the Dependent Care FSA can reimburse daycare expenses for dependent children under age 13 and dependent adults claimed as a tax dependent. If you are interested in the Dependent Care FSA, contact the FSA vendor to confirm your daycare expenses will be considered eligible. We also post the IRS full list of qualified expenses in IRS Publication 503 on our website. The annual contribution maximum for 2018 is $5,000 per family per year, and there is no rollover. Any unused funds will be forfeited at the end of the year. View your FSA's vendor's website to view your account balance and claim history, submit a claim for reimbursement, enroll in direct deposit, and view upcoming payments for claims submitted. For additional information regarding IRS rules and regulations pertaining to flexible spending accounts, view IRS Publication 502 for a full list of qualified medical expenses. The Benefits Office has a number of useful tools and documents available online before you make your elections. Be sure to use ALEX, the interactive decision-making tool, to get an idea of how the plans work and a cost estimate for each plan. The plan comparison chart is also available on the Benefits website. It will detail the similarities and differences between the plans. Still have questions? Call Ask UR HR or the Benefits Office.